Hello and welcome. I'm Jonathan Beale, and this is the ASB Investment Podcast, a show that keeps you up to date on the market and helps you make smart choices with your investments. We've seen a strong recovery in the markets over the past week, so Chris Tennent-Brown is back to give us an update. Why are we seeing an uplift now, and what is the outlook for the near future? These are entirely our own views. It's not investment advice, but we know plenty of experts at ASB that'll be happy to chat if you need. Okay, Chris, hey, lovely to talk to you. I can't see you because we're still obviously in lockdown. I think we're probably 3 weeks, feels like 3 or 4 weeks in, and we thought it was an opportune time to maybe touch base and catch up with what's going on. So obviously things are pretty fluid and moving pretty fast, so it'd be good to update our customers on what's going on and, more importantly, why things are changing. But maybe start with a little bit more about how are you finding lockdown? What's been some of the interesting things you've been up to?
I think it's been interesting. I can't say I've loved all of it. I've certainly missed a lot of the interpersonal contact that we normally get at work. But it's been amazing how well the technology can keep you connected. And so the thing I probably learned the most is just how much I appreciate a nice sunny day and getting out and stretching the legs and that sort of thing. So it seems like there's more birds in the backyard, and I've really enjoyed that aspect of it. And that's been a real plus for me. My backyard's looking very tidy.
It is some of the simple things, say, that you sort of take for granted, like sort of the sunny days, or going for a walk, or clear skies. Like we've got no planes flying over, so it's like the sky seems a bit clearer. And and just doing simple things like I've done a bit of baking with my daughter and stuff. If we can find flour seems to be the new gold. But it's been quite difficult to get that type of stuff. But it's sort of, you sort of get used to it, don't you? I wouldn't want to do it forever, but certainly there are some positives.
Yeah, I agree, and I think it'll be really interesting to see what we keep going after this, and hopefully in my household and my entire neighbourhood, this habit of stretching the legs and going for a walk will continue, because it's really nice.
Exactly, and it keeps the weight down with all the biscuits I'm eating as well. So we just about move on, and I suppose things are, we're getting a little bit more used to lockdown, and things seem just sort of different to when we last spoke. And I think there was, share markets were falling by quite large numbers when we first spoke in lockdown. But things seem to have recovered somewhat, and markets have increased. So what's behind that, do you think, Chris?
Yeah, I think that it's a pretty amazing recovery, and in hindsight, looking back, late March was also a pretty amazing period of panic. If we look at the actual way the market was behaving back then, there was a few days where pretty much everything was for sale, and a lot of bonds, a lot of companies or the company's shares were getting sold pretty aggressively, and the only thing anyone seemed to want in the world was cold hard US dollars, and the US dollar got really firm. And that was a really stressful point for the markets. Since then, there's a lot less stress in the markets, and that's really a reflection of a lot of action from governments and central banks. There's still a lot of uncertainty around how long we're all going to be locked down for, and how the next months and years will pan out. But I think markets are way less stressed than they were back then, and we've seen a pretty decent recovery in share prices, and bond yields have settled back down at really low levels again, and they're nowhere near as choppy as they were back in March. So overall, both of those developments have been really positive for investment portfolios and their recovery from that big dip in late March.
And what are markets seeing that maybe others don't, about why they feel a little bit more confident, and why they've started to go up in quite large numbers on some days?
Yeah, I think the truth sometimes lies in between the levels we've seen. I think people were panicking with an awful lot of uncertainty and a lot of worry in March. then when things like the lockdown started, and they started to appear to work, flattening the curve, as they say, people started to get optimistic. And likewise, the huge amount of money that central banks are committing to put into markets is going to be a positive in the long run. But saying that, there's still a lot of uncertainty around, so I can't rule out further periods of volatility. But hopefully we won't see the outright stress that we saw in markets back in March, purely because central banks have really put a lot of mechanisms in place to try and make sure that doesn't happen. In terms of things that markets are seeing that other people aren't seeing, I don't know whether there is anything, but markets probably just aren't as panicking quite as much. But we're going to see some stuff over the next few months that will be challenging. Now, we're just about to get into the thick of the reporting season in the States. So whilst we're getting a little bit more upbeat about the outlook, we're now going to start to get some hard data on how companies are actually going in the lockdown, and that'll still be challenging for investors to digest over the coming months.
One of the things that's been really interesting, and a lot of customers I've spoken to have sort of compared what we're going through at the moment to the global financial crisis. And I think it was you said, Chris, that that was a banking crisis, and this is a health crisis. But the response from governments around the world has been massive, but does seem to have helped stabilize market and confidence around the world.
Yeah, definitely. And I think that the most peculiar thing about now is really this is if you like a self-imposed recession, whereas the financial system created it last time around. Whereas when we look at our forecasts, if we chose to stop this tomorrow and we got out of lockdown and we didn't have a reoccurrence of the virus, our growth prospects would be far, far better than if we stay in lockdown for a long time. And of course, none of us know exactly how that's going to pan out. We just have to see how the health side of things evolves and what the right thing to do from a society perspective and a policy perspective is in those environments. So that aspect's quite different to the global financial crisis, where we were just seeing stress after stress after stress, and then that in turn impacting people and businesses.
I'm glad you raised the word forecast, because that seems to be the new buzzword of all sort of treasuries around the world, and no different here with Grant Robertson. I think it was yesterday, talking about the work they've done on what could the world or what could New Zealand look like through some different scenarios. And just want to give some flavour to that, because some of the numbers are quite dire and can be quite scary. So do you want to just give some sort of what's your view on the forecast that the Reserve Bank are doing, and sort of some of the stuff you're doing yourself at ASB Economics Department?
Yeah, that's a really good question. I mean, there are so many forecasts out there, and one of the problems with it is you can look at a table of scenarios. Our Treasury put out 7 different scenarios, but if you want to write a really negative story, well, then just look for the scenario that has the highest unemployment rate, and that'll grab some headlines. We started out, well, we usually just present one scenario, that's our economic growth forecast, and then we were asked, hey, well, can you put a couple of extra scenarios around that? And I said, well, our other scenarios, it's just worse than what we're forecasting, because this thing takes longer to sort out. That wasn't quite accurate enough, so we've simplified it down to 3 scenarios. But I think within all of these things that people are talking about, there's a couple of key drivers that we just don't know about. The first is how long we need to stay in this lockdown. So if we think about this alert level 4 as the highest level, well, economic activity is about only 60% of what it would normally be when we're in this sort of level of lockdown. So clearly, the longer we're in that, the bigger the recession is going to be. And at the other end of the scale, alert level 0, if I can cheekily call returning to normal, growth will be whatever it is. And so the key variable in all of these things is just the length of time we stay in the hardest lockdowns. So in that sense, it's in everyone's interest, if we can, to get back to work, so economic activity can resume, people can start generating their own income, rather than needing the support and subsidies from the government. And essentially, that's the variation in these forecasts. I think the base starting point, though, is that the second quarter of activity is clearly going to be a major contraction, and everyone knows why when they see what's happened to all of our lives. From then on in, it comes back to how quickly we can get back to work, and then finally, how quickly we can get back to interacting with the rest of the world for things such as tourism, which are really, really important to our economy. And those are all the ingredients that we put into our forecasts and how they vary between forecasts. The other assumption within the forecast is how much does the government do? Now, 2 or 3 weeks ago, we thought the $12 billion support package was pretty big. Now that looks pretty small, particularly if we're in this lockdown for a long period of time. And the governments, it's really encouraging to see them pretty open-minded, that they just constantly see that support package as work in progress that needs to change to the scenarios. And that's an important part of the forecast, as well as the assumptions that you make about how much support the government can provide. It's going to be in the tens of billions of dollars, 20, 40, $60 billion. In New Zealand's case, by the time we come out of this, we think.
It's very different, hey, because you start thinking about previous sort of recessions. It's always like the commentary is all about the recession is going to take a long time to come out of, where what we're experiencing at the moment seems to be that almost the opposite, isn't it? Like it's once the lockdown moves from, say, 4 to 3, and then that will open up a little bit, then it moves down to 2, and we're trying to get back to a bit more normality, that actually the recovery is going to be quite quick, which is sort of, I suppose, different to what we've seen previously, where recovery seemed to take a lot longer. Is that what we're expecting to see?
Absolutely, and that recovery is really a function of doing everything right. When you read some of these forecasts and the unemployment rate jumps to 25%, people of course go, well, the last time that happened was the Great Depression, and then they imagine years and years of economic stagnation. The difference is that in the Great Depression, the reason unemployment rates got that high and stayed there for so long was they made so many policy mistakes in the early years, whereas now all the policies they're carrying out are exactly right. We've learnt our lessons. The problem with this is growth might return quite quickly, but there's going to be an awful lot of government debt. So there is a price to pay for this quick bounce back, and that is the government is going to be a bigger part of driving activity than what it has been in the past, and government debt's going to be a lot higher. But in terms of getting back to normal and not having a lost decade like we did in the 30s, Treasury's not is not including that in their forecast that we lose a decade, and neither are we, and that's really a function of everything so far going right. The thing we don't know whether it's going to go right is just how well we cope with flattening the curve, making a vaccine, and all of those things which relate to the virus rather than the policies that are getting rolled out by central banks and the government.
And then thinking about further afield, because I suppose we're quite sort of focused on New Zealand, obviously for really good reasons at the moment. But obviously, if you think wider around the economy, China and the US, it's like China seems to be sort of coming through it quite well. So maybe a couple of comments on what you're seeing from China, and then maybe just move over to the States, where maybe it's a different story at the moment.
Yeah, those are really good things to focus on. I really enjoy reading reports from a few people I know in the logistics and importing game, and because they've got people on the ground in China writing weekly updates on what's happening, and China is trying to really get back to work and get things working again. So for all of us, they are the test case, if you like, of how well do these shutdowns work, and how can you get back to work and not have flare-ups again. In contrast, we look at somewhere like the States, where they'll want to get to that stage down the track, but it's easy to imagine it being way more fragmented in the States, as you've got state and federal instructions coming out that are sometimes conflicting, and different experiences from state to state as well. So I think how the States come out of this will be different from China, just like the States has handled it all pretty badly in my mind in terms of the blowouts in cases, particularly in New York, that they've had. And so watching them recover might be a different story from China. But in saying that, China's not out of the woods yet, but they are the first country that we can really watch to see how they open back up again. And we'll have our experiment in opening back up again too. We've got some big advantages in being small and being on an island. So I'm hoping that we'll do pretty well on our opening up phase. And so far so good here in New Zealand.
Exactly. And then I suppose we've sort of tried to focus some on the positive things and that have been happening, and there have been a lot. But I suppose the message as well going forward is there's still going to be lots of uncertainty that we're going to see on the health crisis, but also share markets. I don't think we're not out of the woods yet, are we, Chris?
Absolutely. There's companies that we can see now have made great decisions in the past, and their world has just changed on them. You can look at someone like Kathmandu, that was very expansionary just prior to this crisis, and then they've had to go back to the market and do a capital raising. The airport, Auckland International Airport, has had to do a massive capital raising because they just need money to weather through this storm, and so this is changing the outlook for businesses, and we'll see more of that over the coming months as firms working out what do they need to do to get on with it, to survive in the first instance, and then come out the other side. So I think of this in three stages. There's the crisis that we're in now. There's the transition phase, which China's in now, and then the third stage is the new world that we wind up with at the end of this. And those three phases have different implications for different companies at different times. On a really positive note, you look at it, things like supermarkets, Fisher & Paykel, healthcare, they're having to make really positive decisions about how to operate in an environment where they've got huge demand. And at the other end of the scale, you've got companies like Air New Zealand that are trying to work out how do we survive when we've got next to no demand. And so that will impact firms in different ways. We'll start to see that in their results and their behaviours in terms of things like the capital raising that we've seen over the last couple of weeks. And there'll be plenty more of that over the next month or two.
Yeah, and you've been really consistent about that type of message as well, that companies will react, won't they, to the situations they're in. So they'll start to think about how we do things differently. How do we market our products and services differently? How do we distribute differently? How do we just work differently? You know, if you just use ASB as an example, who'd have thought in the space of a few days that you could get 5,000 staff and get the majority of them, you know, over sort of 4,500 people working from home for a bank and still being able to interact with customers, you know, actually arguably maybe in a better way than we did previously with the use of technology. It's quite incredible how we seem to be able to adapt, or businesses seem to be able to adapt to the situations they're in.
Oh, absolutely. And one of the things I love about businesses is that no leader of a business ever has a strategy of how do we give up. They've always got strategies of how to survive and prosper. And that's where this time is fascinating to see what businesses are doing, and likewise to see the commitment from the government to help them. There'll be plenty more of that that'll need to happen while we're shut down too. But businesses always want to survive and always need to adapt, and there could be some really good things that come out of this. You know, I think one of the things that might permanently change is the need to have big head offices where we all need to go for all our important meetings and so forth. This working from home and using different technologies, I think, works really well for a lot of people. Now, that in turn frees up a lot of infrastructure that would otherwise need if we stay committed to the idea of everyone jumping in their car and driving to work. So it'll be really interesting in this next level of the lockdown where people that can work from home are required to, just to carry on reinforcing some of those habits. So there could be some really positive things that come out of this that actually allow businesses to go better in the future, and that'll be really interesting to see how that factors into the equation over the next year or two as well.
Yeah, you're right, and also nice segue into sort of customers, that what customers are saying and the positivity. Like if you go back a few weeks, there was obviously a lot of panic for people around there, seeing their KiwiSaver balances go down or their investment portfolios go down, and that's really disconcerting for people. But I think in the last few weeks, we've certainly seen a bit of a change and a more comfort coming back to customers. They're asking really good questions. They're looking a bit more forward thinking rather than back, and it's some of the stuff that I'm sure business owners are doing are sticking to the basics, and understanding what you're in, not making rash decisions and being calm in these types of events. All those sort of things that you try and say to people, but actually we're starting to see that behavior come through. And I think one of the key parts, and you've had a big part to play in this, Chris, is the sort of communication. Because I think sometimes you can get caught up in this sort of vacuum of what's going on, but actually just clear, concise information telling you exactly what's going on, and some guidance at these times are really important, isn't it, Chris?
Yeah, absolutely. And I like to comment that Aidan made in an earlier podcast that he was really encouraged as the head of KiwiSaver that 98% of people had done nothing. Which is the right strategy for the majority of people, even when markets are volatile, is to stick with your well thought out long-term plans. And so it's good to be a part of that. It's also really encouraging when investors see this as an opportunity. It's no coincidence that the peak period of uncertainty for markets, when they were very volatile and down a long way, was when we saw people wanting to cash up. There's not many people that are brave enough to go, this looks really terrible, I want to invest more on the bottom of the market. But it is really encouraging that some people see this downturn as an opportunity, because it was pretty discouraging over the last few years having people say, I don't want to invest because I think markets are too high. Now, people were saying that back in 2015 and 16, and they missed out on 2 or 3 phenomenal years for markets. So it's nice now that we're seeing dips, that some people are seeing it as a positive sign. And like Aidan said, it's encouraging that the majority of people are sticking with strategies that are pretty well thought out. So what else have you been talking with customers about, JB?
A lot of it is just sort of, firstly, listening to what people are saying and sort of empathizing with them, that it is actually, it is uncertain, but it's the same thing I've been saying for a while. It is about the basics. It is about what's your time frame, what's the goal of the money, has anything changed, that what you're trying to achieve, and a lot of the times that hasn't, and people are comforted by the fact that that makes sense. They're starting to now ask more questions, I suppose, around the way we manage money and what are we actually going to do, which I think is awesome questions. And so things around, so are you going to make any changes to the assets that you invested in? Are you going to move more money into this and that? Those are the types of things that we do on a quarterly basis. And it sounds counterintuitive, but you've seen share markets go down. You've seen sort of your balance in your portfolio maybe move away from stocks and shares and move balance more into fixed interest and cash. But what we do on a monthly basis, you'd rebalance. And actually, we've been in the market buying equities to balance your portfolio back to your risk tolerance, which actually doesn't get talked about too much in the market, but it's actually a real positive for customers to keep you in the right risk tolerance profile that you should be, but also taking advantage of some opportunities the market present. Because there's always there needs to be a buyer, there's always going to be a seller, isn't there? So there are definitely opportunities
Absolutely.
out there. That's what I think that's what you've got to focus on. But comms and talking to people and being clear in our messages is the thing that we're hearing from customers that they value the most, which is lovely to hear.
One of the things at times like this, when I saw those peak periods of selling, when we were seeing huge volumes and high levels of calls, high levels of people wanting to get out of investments, happened to coincide with the bottom of the market in this last couple of months. And so for me, that reinforces one of the things that I think you're essentially saying is we stick with the long-term plans. And I've always liked that aspect of what I do at the job is stick to things which work over the medium to long term, because these short-term bouts of volatility are just impossible to time. And so it's really comforting for me when I see the likes of you and the investment committee just sticking with the strategy, things like rebalancing portfolios and sticking to well thought out themes. I think it's the way to go.
Yeah, I don't know if I mentioned it, but we had an investment committee meeting pretty soon after the sort of COVID started and the lockdown. And Gavin Walker, who's the chairman of the bank, who used to be the chairman of the investment committee, came to the meeting and spoke for about 20 minutes. And his message was very clear around, and he's been in the markets a long time and ran the super fund for New Zealand. And his message was very clear. This is the time where you stick to what you believe in. And that's critical, because if you don't, that's when you lose money and make the wrong decisions. So being very calm about it, what do you believe in, what's your processes, and those things pay massive dividends over the medium to long term. And it was lovely to hear. It was a real clear message that we all agreed with. You have your processes, and they're there for a reason, and you believe in stuff. You don't suddenly change your beliefs just because something's changed. And I think that's really helpful and some really good guidance for us. Hey, thanks, Chris. We'll probably just call it a wrap there. And as always, thanks very much for your time. Pity I can't see you, but I can certainly hear you. And so thanks again for your explanation of what's been happening and some insights in what the future might hold. So keep safe, be kind, and speak to you again shortly.
Great. Yeah, it's been a real pleasure to be on the line with you, JB, and I'll look forward to the next one.
Thanks for joining us today on the ASB Investment Podcast. If you have any thoughts on today's episode, or if there's anything you'd like us to discuss on future shows, please fire your suggestions through to podcasts@asb.co.nz.